Well, hello and welcome to the second presentation of the Thommen Talks live webinar series. I'm Todd Frederick of Thommen, and I'll serve as the moderator. Today we have Brian Swilling and Ryan Whitley, co-founders of NAVIPATH. They will discuss navigating the financial impacts of COVID-19 on your practice. A little bit of housekeeping. We'll start with about a 40-minute presentation, and then we'll move to Q&A. On the right side of your screen, you'll see a button that will allow you to submit questions. You can send questions throughout the seminar, and then we'll collect and we'll pose them at the end of the presentation. So it's my pleasure to introduce the co-founders of NAVIPATH. They came to us through a connection within our field force who worked with them as a practice consultant. Thank you, Whitney. NP was formed to help individuals and practice owners navigate their own unique path to financial independence. NP helps dentists and dental practice owners through the different phases of their careers. Empowering their clients to make informed financial decisions is the goal. Co-founders Brian Swilling and Ryan Whitley are uniquely qualified to work within the dental community as they're also part of it in their personal lives. Their goals are to educate, empower, organize, and prepare their clients for financial future during these uncertain times. So with that, I'll turn it over. Gentlemen, welcome.
Thank you, Todd.
Yeah, thank you, Todd, and thank you, Thommen, for having us here. I want to welcome everybody who's joined us today. I know there's a lot of information out there, and we want to hopefully add a little bit unique experience to the thought process. So we're going to talk about kind of your 90-day cash flow plan for dentists given these uncertain times. So next slide, please. So it's a little housekeeping. This is our disclosures. One of the main points, because we're going to be talking about a lot of tax and legal advice. We are not tax and legal professionals. And for tax and legal advice, you should consult your professional. So if we go to the topics we'll discuss today, most of these topics will go over how to build out your 30, 60, and 90-day cash flow plan. So if we bring up the topics slide, we will go over how to, obviously the first part of your cash flow plan is understanding what the legislation that's come out can help you fill that cash void. We're obviously going to talk about managing debt. A lot of the cash flow planning will be related to getting a new debt that's hopefully forgivable, but also managing the debt you currently have, practice retirement plans and what to do with those. And then, one of the big things we talk to our clients about today and ongoing is how to confidently stay invested and managing emotional decisions. And that's emotional decisions in the business and when it comes to investing. So the next slide, please. So one of the more important aspects, or what everybody's worrying about, I'm sure people, the dentists and specialists on this webinar have probably watched one or many webinars related to this topic. We're going to provide a high-level overview, but I just wanted to highlight that daily, hourly, new clarification is coming out regarding these topics. So this presentation is on April 7th at noon Eastern time. So if you're watching this in replay, make sure you get the most up-to-date information from your advisors. So first is the Family First Coronavirus Response Act, so FFCRA for this. This is an expanded FMLA provision. It came out, and the main thing that our dentists are worried about here is it talks about requiring businesses to pay 2 weeks or 80 hours worth of additional pay time off, or pay time off if you don't offer that currently. The latest advice from the Department of Labor actually clarified that and said businesses under 50 employees will be exempt. It also there's certain clarification or additional clarification around whether dentist offices with over 50 employees would also be exempt. So keep a lookout for that. There may be a requirement to pay 80 hours of pay time off to employees. So we'll keep track of that. Discuss that with your HR attorney, the best practices there. The next and kind of probably more important bill or act is the CARES Act, which was a $2 trillion stimulus bill. So big numbers here. The main things to consider for dentists are these SBA loans. So more than likely you have shut down partially or mostly your business practices, depending on where you are in the country. You may have staff that's part-time, or you might just be doing emergency dentistry. But most of the dentists we talk to are considering what they should do and when they should apply for these loans, and how they should apply for the loans and what they should do with their staff. So a big part of this act was providing these small business loans. The first one is the Economic Injury Disaster Loan, EIDL for these purposes. That's a loan that's available to all dentists or all businesses that their state or their local government has declared a state of emergency. So that might not apply to every person on this call, but I think at this point it would cover most people. There's a key provision on this. This is not forgivable. This is also requires guarantees and formal, and collateral, but could also be a bigger amount than the other loan, which is the payroll protection loan. So make sure, or paycheck protection loan. So make sure you reach out to your advisors, your legal and tax advisors, and any other people you deem to determine exactly which loan works best. But for example, the disaster loan comes with a $10,000 grant. So if you apply for that loan, it will not qualify for forgivability, but it will give you, in supposedly 72 hours, you're supposed to get that $10,000. We have not talked to anybody who's yet to get that $10,000. So don't rely on getting that in a timely basis, but that portion of the loan would be forgiven. So we'll talk about strategy after talking about the Paycheck Protection Program in a little bit, but we'll talk about the differences first and then talk about some strategies we've seen utilized there. So a little bit more details on the EIDL loan. There's a $2 million cap, and it's based on 50% of trailing 12-month gross profit. The interest rate on that is 3.75%, and it's up to 30 years. All these loans and all current SBA loans are being deferred for 6 months. Interest will accrue on these EIDL loans, but no payment will be required. So on to the Paycheck Protection Program, which is probably the biggest focus for most of our dental clients. This loan is forgivable, and any business that it has been affected by shutdown related to coronavirus will be applicable. So it's almost every dentist that we've come across would be able to apply for this. The recent clarification by the Department of Treasury was that these loans will be 1% interest rate, and that's changed about 3 times, but the latest is 1% interest rate with a 2-year term. And this is based on 2.5 times the average monthly payroll. So you average your monthly payroll for the last 12 months, you get that average for the month, and 2.5 times that amount will be your loan. Timing of this is important when you're taking out these loans. The money you spend has to be spent within 8 weeks of accepting the loan. There's a lot of additional clarification needed by the banks. We know some banks are actually allowing you to apply for that now. For if you're a small business owner, for sole proprietorships and 1099 contractors, you should be able to apply by April 10th. But still, we don't know exactly how the application process will ultimately, well, we know the application process, but we don't know how the underwriting and or how fast you'll get these loans, because we don't know any dentists that have actually gotten these loans yet, or even discussed underwriting. These are not guaranteed or collateralized. These are mainly designed to encourage businesses to bring back their employees. So the forgivable amount is directly related to specific costs related to healthcare, salaries, rent, interest on mortgages, utility payments, and interest on other debt prior to 2/15/2020. 75% of these loans have to be used for payroll costs. So that's another calculation you need to determine. You need to build out. It's very important, again, to build out your 30, 60, 90-day cash flow plan to know exactly how and when and what you will use these two loans for. Additional clarification on these loans is that you can apply for both of them, but they need to be used for different purposes. So the recommendation is to make sure you have a very good accounting of where the proceeds are going. Some recommend just having a different bank account for each loan. The current advice is that I've seen out there, and this is again up to the individual's personal situation. But what I've seen is a good strategy is to apply for the EIDL loan, get the $10,000 grant, make sure you specify that is being used for different purposes than your principal protection loan, and then also apply for a principal protection loan, and you can delay receipt of the principal protection loan to make sure you talk to your banker about how exactly you'll go about that. If you go to SBA.gov, there's actually an application there that you can fill out, and your bank can use that application to start the process. So the SBA will not be delivering the funds. A SBA bank, approved bank, will be able to. So most banks that you're using are going to participate in this program. So reach out to your bankers and discuss that. So those are the main concepts. Obviously, getting the principal protection loan should be the main source of your funds, because a portion or a good portion of that should be forgivable. But how you take it and what you use it for will determine your forgivability. I won't go into those details because that could be a whole presentation by itself. Again, so that's the two loans. Again, applying for both will, but then hoping that the payroll protection loan will be most of the proceeds you use is probably a good strategy for what we know at this point. Next slide. So I'm going to hand it over to my colleague, Ryan Whitley, to talk about some additional cash flow strategies. Thank you, Ryan.
Thanks, Brian. So as we look at building out our clients' 30, 60, 90-day cash flow plan, managing debt is a huge component of that. The largest expense that we see in almost all of our practices that we work with is first and foremost payroll. So that's why that's so timely in the new legislation that is in place to help provide some relief there, are where we're having the vast majority of our conversations now. But there are some additional ways that you can continue to shore up your cash flow by streamlining some of your debt, reducing some of your short-term outflows, and then as we look forward to coming out of this, how we can improve some of our debt situation from there. So first and foremost, managing existing practice debt. So that could be from a practice acquisition, that could be from an expansion of the practice or a renovation, if we had some additional ops or expanded the footprint. Equipment loans, real estate loans. So if you own your real estate and hopefully it's set up in a separate LLC, we've got some strategies to discuss there. And then what to do with student loans. And there's two different types for folks who sell loans. There's your federal and then your private loans. So discussing different options that we might have there and some relief. So first and foremost, with your practice loans, your equipment loans, and your real estate loans. And those are some of the other ones, that can all kind of fall into that I mentioned. All lenders are providing flexibility there. So first and foremost, contact your lender, ask for a deferment of your payments. This should be the principal and the interest associated with that payment. Almost all banks are providing some relief there. We've seen anywhere from just 30 days up to 6 months and everywhere in between. So each bank will have their own policy, and that's probably a very fluid policy as things keep changing with how long we think this might continue. Secondly, while you're contacting your banks to ask for deferment of your payments, you should also consider your refinancing options that you may have. Coming into this, it was a very favorable time to refinance debt as rates have been cut almost to zero. So looking into different refi options, it's very timely for that. Most of our clients are experiencing, when they are talking to their current banker or other lenders that they are discussing refi options with, is that they are getting the terms in place, but those terms may not start for 2-3 months down the road because banks are being overwhelmed with an influx of applications for SBA loans right now. So you can lock in very favorable rates now, defer your existing terms, and then transition to a refinanced option when and if appropriate. We're not bankers, obviously. We say defer to your lending sources, but we are seeing some of our clients coming to us with rates in the high 2s to mid 3s for their practice and equipment loans, and then real estate. It just depends on your lending source there. So that's a great way to free up future cash flow that you can put towards other goals in the future. So that's our second half of our 90-day action plan that we're putting together for our clients. From a student loan standpoint, I mentioned there are federal loans and then there are private loans. Federal loans, the government came out and said that they are deferring all payments until September 30th, so the end of September. There's nothing that the borrower has to do. Those payments will be automatically stopped. If you have it on auto pay, auto draft, you can go in and suspend those payments yourself, or if you choose to continue to pay, you've got the ability to do so. From a private loan standpoint, loans are refinanced with all different types of lenders, just like your banking loans. You should contact those lenders specifically to discuss what options you have. Most we are hearing anecdotally that folks are having similar success with those private loans being deferred, just like practice equipment real estate loans. This is a great way to free up short-term cash flow and shore up our finances. Let's transition to the next slide, please. So what do we do with our practice retirement plan? We're getting a lot of questions around those as we work with practice owners all over the country with their retirement plans. First and foremost, we weren't sure at first until this PPP proposed legislation came out. Once the payroll protection legislation came out, it provided some more guidance, but there's still a little bit, we're still waiting for more guidance, we'll say. So first and foremost, most of our practice owners have stopped the ongoing match until they receive their PPP funds. Like Brian mentioned, very few, if any, have received any of those yet. Most folks are waiting in the queue for their application to be processed, and then at that point they'll decide when they want to take those funds and start that 8-week time period, because that's associated with hiring your staff back and maintaining payroll. With most dental medical practices shut down for probably the next month to 6 weeks, it may not be timely to receive those funds yet. So if you don't receive the funds, we're most likely not making contributions to our retirement plan. So however, it looks like, from what we can tell, the PPP will cover contributions, matching contributions to your retirement plan. So your simples, possibly your SEPs, your 401ks are by far the most popular that we have with our dental medical practices. So that 3, 4, 5, 6% match, whatever it may be, that you have for your staff, that your staff contributes, and then you match their contribution, the PPP will cover that. We are under the assumption. We're still waiting for more guidance. It's a little murkier when it comes to profit sharing contributions that may be aligned with a profit sharing plan, or a profit sharing plan layered on top of a safe harbor plan to a 401k, and then for cash balance plans as well, contributions made to those. Profit sharing contributions and cash balance contributions tend to heavily benefit the highly compensated and owners much more than the rank and file. As with the Paycheck Protection Program, it's designed to protect your employees. It's not a profit protection plan, it's a payroll protection plan. So things that are aligned with a K1 distribution, so owners distribution from a K1, the profit sharing and the cash balance plans, we are under the assumption right now that this will not be covered by the PPP, but we're still waiting for more guidance on that. So we really don't have a great answer yet on that. The nice thing about that, most of those contributions tend to be made later in the year as we look at, even up until we file our taxes. So for 2020, that gives us a good amount of time to make decisions there. So in short, most folks have hit a short-term pause on contributions, matching contributions. If the staff still is contributing and they're still on payroll, please allow them to do so. So there's no legality around that. And it's a down market, so it's a great time to keep buying things when the prices are on sale, as we'll say. But for the other contributions, anything K1 associated, that's going to be later in the year most likely. So we've got some time to make those decisions. Moving on, the coronavirus related distributions. So anything, if you can say you've been economically impacted by the coronavirus, which almost all of us can, in the stimulus package, there are some provisions that have been put in place. So first, it will waive the 10% early withdrawal penalty from your qualified retirement plans. So typically, if you were to take a withdrawal from a retirement plan prior to age 59.5, there was a 10% penalty, and then you would pay ordinary income taxes on the amount withdrawn. The 10% penalty has been waived. However, you will still pay taxes on those withdrawals. One caveat to that is that those taxes are spread out over a 3-year time period. So you're not paying all in year one. And then also you are allowed to repay the amount withdrawn to the plan over that same 3-year period. We're not advising clients to withdraw early from their retirement accounts for a number of reasons. We have other sources of liquidity, hopefully, be that a line of credit, the Economic Impact Disaster Relief Loan, or the PPP. So there are other sources of income, and then we're reducing our outflows by contacting our lending sources to reduce or defer many of our outflows. So, and then also we would be taking distributions from our retirement accounts in a down market, which is not advisable as well, because 6 weeks ago that 100,000 was worth 140,000, and now it's worth 100,000. So we're pulling out in a down market. It's much more difficult to make those returns back if we're taking money out while still trying to capture some of the recovery. The loan amount, the third to last bullet point, has been increased to 100,000. It was previously 50,000, and this is only for new loans taken from retirement accounts. Again, we're not advising this unless it's a kind of action of last resort. That will be available up until September 22nd. That's increased to 100,000. Most folks on this call, this may not apply to for these next two bullet points, but required minimum distributions. That's when, up until this year, if you were 70 and a half or now age 72, distributions required from traditional IRAs and traditional 401k accounts and other retirement accounts. It forces a certain amount out based on your age, a percentage, because that money has gone in pre-tax and it's grown tax deferred. So the government wants to start taxing that at some point. So if you're not taking distributions, they force you to start taking an amount out, and it's an actuarial amount based on your attained age. So those have been waived for the year 2020 because of the coronavirus. For solo cash balance plans, these are not multi-participant plans that many practices have set up. These are solo plans. The minimum funding date for these have been pushed back to January 1st, 2021. Let's advance to the next slide. So working with our clients in building out their plans, one of the biggest things we work on is cash flow, and cash flow supports all of our future goals, and many of those goals are surrounded different investment strategies. So in a market that has been impacted the way it has been, and the incredible shock to the system that we have had to this market, and the rapid downturn that we've seen from the highs, it's down 35–40% from the highs, and then we have seen a bit of a uptick the last couple of days. But how do we confidently stay invested in this market with such heightened volatility, and then with the emotional component of the shock to the market, but also we're out of work, we're not producing, so that's affecting our cash flow. What do we do in the short term, and then what do we do in the intermediate and longer term to make sure we're not making rash decisions based on our emotional well-being? So with our investment philosophy, the way we work with our clients, it's really rooted in a number of different things in our portfolio design. So my partner Brian, who spoke earlier, he cut his teeth the first 10 years of his career in Wall Street and investment banking. So he went through the 08 downturn, as many of you will remember, with the market loss almost 50%. Over the downturn. Younger investors probably did not experience that to the extent of anyone 35 and up, what they felt. So he was working with ultra high net individuals, so 50 million of investable assets and up, and lending to different hedge funds. So it's very different than what we're doing now, but we've taken that experience that he had, coupled with my experience on the planning side as a certified financial planner, and built that into our investment philosophy. Brian's group, they built a $500 million business unit that was lending to hedge funds, and they had zero Madoff exposure because they could not see the underlying assets. They didn't understand the investments that were there. So when the market crashed, his business unit boomed because of the lack of Madoff exposure that was so rampant in the hedge fund world in 07, 08 leading up to that. So the last 10, 12 years or so, it's been, if you've participated in the market, you've won across the board. So from what we have seen, so many of our clients became very complacent, and they haven't looked on to managing their investments properly. They haven't optimized their portfolios. They haven't rebalanced their portfolios on a high level. So we are updating all of our portfolios across the board for qualified and non-qualified investors. And then we are looking and having daily calls with our team of investment analysts that we have access to. We had one yesterday. I had one at 11 a.m. Eastern prior to this call, and I've got another one at 2 p.m. Eastern today. So as we are updating our portfolios, we are making sure that we have the ability to capture as much of the rebound as possible. And in the media, they talk about different letters that this rebound might look like. Is it V shape? Is it U shape? Is it L shape? We really don't know, but we know at some point we are going to have a nice rebound. We have panicked individuals coming to us, and it's understandable that the panic is there, asking about moving to cash or going ultra conservative. And if this money is very short term, then yes, that might be the right decision. That money should have been more conservative to begin with if it was short term. However, if it's a longer term outlook, we need to make sure our portfolios are optimized to capture as much as the rebound as possible. The Feds have cut rates incredibly low. There's been significant influx, trillions of dollars into the economy as part of the stimulus package. The PPP is designed to put money in the pockets of our employees, which there will be such pent-up demand when we are released from being really on lockdown and sheltering, as most states are, that folks are going to get out there, and then hopefully it's like spring break. They are just dumping money into the economy. So we want to be able to make sure we capture the quality companies that are poised to still be here and to participate in the rebound. The last bullet point there is just staying invested, but making sure we are optimized and proactively rebalancing, because the best days often follow the worst, which we are starting to see right now. So that really wraps up the main body of our presentation, and we're going to move on to the question and answer section. Let's transition to the last slide.
Well, thank you, gentlemen. It's obvious that there are a lot of moving parts, and this is kind of an ongoing situation. If you were to give us a handful of things that must be done at a high level to manage your finances and to take care of a practice, looking at the bullets you provided, do you have a small handful to say, this is what I'd look after immediately?
Yeah, I think the best strategy is obviously building out that plan. So if you've never done a financial plan in the past, this is probably a stressful time for you, like it is for everybody. But building out and look at it in kind of three different stages. First, you have your 30-day, which you can make sure you have business and personal liquidity, expense deferment, bridge the gap, for the shock of the shutdown, right? And then you look at 60-day kind of a window, and that's kind of cash flow planning for kind of reopening and rehiring. So you're building that bridge to normal operation, and then kind of a 90-day window. So it's rebuilding that cash liquidity that you have in your practice, paying off restructuring debt, like Brian mentioned, and obviously building out a true financial plan. So when the next, reduction in production, the reduction in cash flow happens, you are more prepared for that situation. So we're here and having conversations with our clients across the U.S. About building out these plans, or really changing any plan we built out recently, because 3 months ago the world looked a little different. So we're spending a lot of time just refreshing and taking a step back and kind of reanalyzing that kind of stuff.
Well, it seems all of us are learning to use these new media platforms, such as the one we're on right now. Is this something that you can work with a client at distance and be effective?
Yeah, so we have had for a while the ability to work remotely, and with our dentist, we are located in Charlotte, North Carolina. So a lot of our dentists are in the North Carolina, South Carolina area, but we do have dentists across the country, and our planning software and access to video conferencing allows us to do that effectively remotely. And that's the planning, the investments, and any other needs that come up with our clients.
All right, I have some specific questions also. This will kind of get you into the weeds a little bit. Can we apply for PPP, be approved, and delay taking the loan until we know when we are ready to open? And as a follow-up, do we only have until June 30th to spend it?
Yes, so our understanding is that you can apply for the PPP loan, and the time the 8 weeks to spend that doesn't start until you accept the loan, not when you get approved or you take the proceeds. So it'll work differently for depending on your lender, but our understanding is you can get approved with the SBA or your lender. Hold off on taking possession of those proceeds and then use that over the next 8 weeks. The June 30th deadline, you don't have to spend the proceeds by June 30th, but you do have to be able to get forgiveness in this loan. You do have to have most, if not all, of your staff rehired. So there's the calculation for forgiveness, there's a June 30th deadline. So that, depending on how long the shutdown continues, there's a chance that that June 30th date gets pushed out. But the idea is we want to get back to full employment or as close to full employment as possible by that June 30th deadline. So you do not have to spend it. It's 8 weeks from the start, but it doesn't stop at June 30th. You just have to be pretty much at full employment to qualify for the forgivable transaction.
And a question on taxes here. What are the tax implications if you take a loan from retirement funds?
So if you take a loan from retirement funds, it depends on the retirement account. If it's a Roth account, you've already paid the taxes on those. So anything Roth money. If it's traditional money, you're paying ordinary income tax on that money. So just like whatever your ordinary income tax bracket is, that money will be added on top of that to that tax bracket. So you'll be paying in your current tax bracket unless you get bumped to a higher tax bracket based on any withdrawal you make from your retirement account.
Okay, and earlier you had listed a bullet on stimulus checks, but I don't believe you really gave us your take or your thoughts on that.
Yeah, so the stimulus check is part of the CARES Act, and that's paying $1,200 per individual. So a married couple will get $2,400 plus $500 per child under the age of 16. So this does not apply. There are income limits to this. So this will apply to staff, but it will not apply to most of the doctors we deal with. So you're going to phase out around 75,000 AGI. So according to your last filed tax return, you calculate that forgiveness. So that'll help a lot of the staff of our dental practices.
That's 75,000 individual AGI. So double that for a married couple. So 150,000. They'll phase out between that and 199, or basically 200,000.
And there's also related to that we didn't really talk about this in detail because there's been a lot of discussion about this already, like what do I do with staff? So understanding the stimulus is important to communicating to staff. Also, the enhancements to unemployment, depending on your state, is also important on communicating with your staff on a regular basis, why you're doing things, how you're doing things, and then the unemployment factors into when you decide to take the PPP loan. So understanding those aspects come into that cash flow timing conversation, and communicating with staff on a regular basis could help relieve and help get back to work as fast as possible when we are allowed to do that.
And for the small business loans, do you think the government on these type of small business loans, the money will run out fairly quickly? And is it important to get your application in as early as possible?
The initial analysis was you should apply immediately because more than likely this money will run out. The Treasury and the administration has stated that if this money runs out, they will do whatever it takes to get more money into the system. So the new analysis does say that more than likely this will not run out. That if it gets close to funding all that was originally approved, a new legislation increasing this amount will come out. And our guess, and it's really just a guess, is that is really likely to happen. The initial amount will not be sufficient for the loan requests, and I think that is my understanding is that's currently even considered in the bill they're drafting at this point. That assuming the next round of stimulus will include these loans. So our initial analysis is that it will not run out. And if you can't, and again, you can apply now and defer acceptance of the loan. So that might be your best bet because you should already be approved and that amount should be already included in the amount, whether you take possession of that or not. So we don't know exactly, but we're predicting that you don't have to rush out and immediately get these loans. They will be available when you need them, but you can go ahead and apply.
All right, as a small business owner who receives W-2 income, in addition to an S-Corp pass-through income, can my W-2 salary be included in the PPP calculation?
Yeah, our understanding is that yes, a doctor's salary and an associate's salary would be included. So the W-2 portion up to $100,000. Any portion above that will not be considered as part of the forgiveness calculation. K-1 distributions are right now, the analysis of those are excluded from the forgiveness calculation. So what we see a lot of people doing is designing their income where they're maxing out that 100,000 in W-2 when they or considering maxing that out once they get these loans to make sure they maximize the forgivable portion. But just salary, K-1 distributions are excluded from the forgivable amount. So it's probably better to make sure you talk to your tax professional, but you can probably still take those. They just won't be included in the forgiveness.
Right. And then also coordinating very closely with your payroll company to make sure everything is coded properly and accounted for. So when the forgiveness portion does come up, you have accurate records there for that. It's very important.
Yeah, the latest advice I've seen is have a separate bank account for each loan you get. It might be a little overkill if you're tracking these properly, but that's the advice I keep hearing from banks and other professionals is to have two separate bank accounts for the loans and then track those very carefully. Again, you cannot use, if you get both loans, the EIDL and the PPP loan, you're supposed to be using those for different needs. So make sure you analyze that very carefully.
Okay, and on the PPP, are you still eligible for that money if employees have signed up for unemployment?
Yes, yeah, there's no restriction to status of staff and how they're getting proceeds. So that's why we talk about a lot of our clients are considering keeping their staff on unemployment until they have a clear date when they can start back, because you can still apply for that PPP loan, but you need to be using those proceeds to pay staff. So as soon as you start drawing on those funds for the PPP, the purpose of the loan is to rehire all those staff. So so you can qualify, and almost all our dentists have their staff either mostly or partially on unemployment and only working on an emergency basis possibly. But the idea is by June 30th, you would hire those staff back and use the PPP loan to fund those salaries.
And considering the additional $600 per week enhanced unemployment, does that come from the state or federal and as separate payments?
Yeah, so we don't exactly know how the payment will happen. We've not seen clarity around that, but Our understanding is that you apply at the state level, and that amount is dependent on the state you live in, and then you will also get, if you file with your state, you will also get the $600 per week payroll check from the government. I'm not sure how that will be funded at this point.
Okay. And the PPP loan, after approval, how long do you have to actually use the loan or take it? Is there a set time period between approval and use?
That will depend on some more clarification, but it might depend on the bank. But again, our understanding is that you get accepted and you have really until June 30th to accept those proceeds and then use those proceeds within 8 weeks of acceptance. So kind of you have a June 30th deadline if that doesn't get extended.
In the short term, I would think of this as almost as a line of credit. We apply for it, we get approved for it, we have access to it that we need to turn on prior to June 30th. So it's going through the process of applying, getting approved, determining what that dollar amount may be, and then that money is there that you can turn on and access just like your typical line of credit. However, there is some forgiveness potential associated with this, unlike a typical line of credit that you'd set up through a bank.
Now, we know that there's been some delays in some of these loans and approvals. Do you know if most banks are processing them now?
Yeah, so we haven't seen anybody receive payment on these loans. We know the big SBA lenders are currently taking applications from their existing customers. So a lot of the big SBA lenders are first starting on customers, making sure they are viable, and then are going to open it up to non-customers via online or paper apps. Maybe by Monday, I think is what I hear around there. But we haven't seen anybody come back and confirm approval or follow up with some underwriting questions yet. We've just seen people apply and say, we'll get back to you shortly. So there will be delays in receiving these funds. We just don't have any idea on how long that delay will be. So it's really important to have other sources of liquidity and not rely on the PPP loan for immediate funding of need, because we don't know how long that's going to take.
And a question to the loan amount here. If your loan amount has more than 25% non-payroll, does the entire loan have to be repaid or just the portion that is outside the 25%?
Yeah, our understanding is that will reduce the amount that's forgivable. I'm not sure exactly. I don't think it's an all or nothing, but it would reduce the amount you would have otherwise been forgiven. So we need to we need to get more clarity on how that calculation will actually work. But the understanding is that you'll still be able to forgive a portion.
Yeah, a good rule of thumb is just this PPP loan, let's use at least 75% for payroll costs, and then use other sources of liquidity if you were to go over that 25% for non-payroll expenses. Staying as clean and accurate as possible is going to be really important with these loans.
All right, thank you. I think that is a pretty good smattering of the questions we were given, and do appreciate the answers. Gentlemen, is there any closing items that we should be thinking about kind of in this this unknown situation that we all find ourselves in?
Well, obviously, this is an important time to be discussing with your professional advisors on a regular basis. There's a chance that by the time you watch this replay, if you weren't able to join, that new laws have come out. So make sure you continue to reach out to your advisors. If you're not getting good, timely advice, we're obviously available to discuss any of these issues with you after the fact. Our contact information is there. Again, we can work across the U.S., so geography is not a problem. But make sure you just stay up to date with things that are going on by leveraging. You don't need to know everything. You don't need to be an expert on everything. Leverage your advisors. Make sure you communicate with staff to keep them, ready to come back. You want when the world opens, you want to be ready to start back and hopefully catch that pent-up demand for dental needs. I don't know, Ryan, if you have another.
Yeah, no, just thank you, Todd, and thank you to the Thommen team for coordinating this, and everyone just stay safe and diligent, and at some point we'll be through this and we'll be back up and running. And as Brian said, that first 60, 90 days back in when we are able to practice again, there's going to be a huge pent-up demand. So these should be some of the busiest time of your careers. So looking at expanded hours, if you're not working Fridays, a half-day Friday, full-day Friday in the short term, expanded weekend hours, there's going to be significant demand for folks ready to get out there, and they're going to have hopefully some money in their pockets to spend. So the economy should come roaring back with the measures the government has taken with these different stimulus packages.
Well, there is an old adage about teeth saying only brush the ones you want to keep. And that is the one thing we can look forward to, is that all the dental care that isn't happening right now will come back and probably require additional work. So there's always a bright side to everything we go through. Gentlemen, that was very informative. I think the financial aspect of what we do in people managing a dental practice, oftentimes we're better at cutting teeth than writing the checks, and that's not a bad thing either. But your advice, I think, was very, very helpful. So I want to thank Brian Swilling and Ryan Whitley of NAVIPATH. I suggest that if you have these questions, to follow up with them. We will provide a recording of this webinar that will be available too. So any questions we didn't get to, hopefully we'll find an answer for you. Gentlemen, thank you. And I'll have you advance the slide once. All right, well, very, very good webinar today. Thanks for participating, great information. I'd like to also recommend everybody tune in Thursday, April 9th at 12 p.m. Eastern. This will be the third webinar in the Thommen Talks Live series. We're delighted to have Roger Levin come back and join us. This time it will be strategies to best prepare your general dental practice for recovery. It is, I assure you, going to be another great program. So with that, tell everyone, listen, be safe, stay well, and thanks for joining us today. Take care.